Term 89, Housing Ratio. The housing ratio, also known as the front-end ratio or mortgage-to-income ratio, is a metric used by lenders to assess a borrower's ability to afford their monthly housing costs. In simpler terms, it measures what percentage of your gross monthly income is dedicated to housing expenses. The front-end ratio is calculated by dividing your total monthly housing expense by your gross monthly income before taxes and deductions. Here's the formula. Front-end ratio equals total monthly housing expense, gross monthly income. Term 97, Impound account. An impound account, also sometimes referred to as an escrow account, is a special account held by your mortgage lender. The purpose of this account is to collect a portion of your monthly mortgage payment to hold funds for future property taxes and homeowners insurance premiums. Term 98, Custodial account. A custodial account, also sometimes referred to as a UGMA, Uniform Gifts to Minors Act, or UTMA, Uniform Transfers to Minors Act, account, is a financial account set up by an adult, the custodian, for the benefit of a minor, the beneficiary, who is typically a child or grandchild. Term 99, Reserve account. In the context of real estate, there are two main types of reserve accounts you might encounter. 1. Capital reserve account, commercial real estate. 2. Owner reserve account, residential property management. Term 100, Capital reserve account. Capital reserve account is type of reserve account is typically used in commercial real estate investments. It's a fund set aside by the property owner to cover major, anticipated expenses related to the property in the future. Term 101, Owner reserve account. An owner reserve account is a fund set aside by a property owner or property management company to cover unexpected expenses related to the maintenance and operation of a property. It's often used in multi-unit properties like apartment buildings or condominiums. The account is typically funded through regular contributions from the property's rental income. It helps ensure the property is well maintained by addressing unexpected issues promptly, which can contribute to maintaining property value and attracting tenants. In essence, an owner reserve account is a financial safety net for property owners to avoid unexpected expenses from causing financial strain. Term 102, GSE Government-Sponsored Enterprise. A government-sponsored enterprise, GSE, is a type of financial institution established by the U.S. Congress to facilitate credit flow in specific sectors of the economy. While they are private entities, they are chartered and regulated by the government, giving them some unique characteristics. Government-sponsored enterprises are complex financial institutions that play a significant role in the U.S. economy. They have the potential to increase credit availability, lower interest rates, and promote stability in the financial system. However, they also raise concerns about systemic risk and moral hazard. Term 103, FHFA Federal Housing Finance Agency. The Federal Housing Finance Agency, FHFA, is an independent federal agency established in 2008 by the Housing and Economic Recovery Act to oversee the United States housing finance system. It acts as the regulatory body for the following key institutions: Fannie Mae, Federal National Mortgage Association; Freddie Mac, Federal Home Loan Mortgage Corporation; Federal Home Loan Banks, FHL Banks, which includes the 11 Federal Home Loan Banks and the Office of Finance, of. The FHFA acts as a watchdog, making sure the GSEs, Fannie Mae and Freddie Mac, and FHL banks operate responsibly and contribute to a healthy housing market for everyone. Overall, the Federal Housing Finance Agency is a critical player in the U.S. housing market. It plays a significant role in ensuring the stability and affordability of housing for American families. Term 104, Freddie Mac. Freddie Mac, formerly known as the Federal Home Loan Mortgage Corporation, FHLMC, is a government-sponsored enterprise, GSE, chartered by the U.S. Congress. It plays a vital role in the secondary mortgage market, specifically focusing on conventional home loans. Both Freddie Mac and Fannie Mae are GSEs involved in the secondary mortgage market for conventional home loans. However, there can be some subtle differences in their areas of focus. Freddie Mac may have a slightly greater emphasis on refinancing existing mortgages, while Fannie Mae might handle a larger share of purchasing new home loans. Term 105, Federal Home Loan Banks, FHL banks. The Federal Home Loan Banks, FHL banks, also known as the FHL bank system, is a network of 11 regional banks, chartered by the U.S. Congress. They function as wholesale lenders to member financial institutions, primarily focusing on community banks, credit unions, insurance companies, and community development financial institutions, CDFIs. They play a vital role in promoting affordable housing, community development, and financial stability by providing member institutions with access to funding and liquidity.